Thanks so much for joining us, and happy Friday to you. I'm Marlon Bowling, your tour guide to the ag commodities, and boy, we're getting close to the end of the week here. It's been a tumultuous week, let's put it that way, in the ag commodity trade. And here to talk more about it, I want to welcome aboard Brian Hoops. He is the president of Midwest Market Solutions. He is located in Springfield, Missouri. And Brian, we just had some jobs data that came out a short time ago. Wanted to get your take on what that may mean in the domino effect as it works its way over to the ag commodity realm. Jobs numbers way higher than expected. Is that right?
Yeah, I'm glad you brought that up because it does have a big impact on commodities in general. So the jobs number almost double what the trade had been expecting, around 334,000 jobs added last month, trade looking for 170,000. What that tells the trade is there is no way that the Fed is done raising interest rates. You know, there'd been some hope anyway that maybe they'd start to lower interest rates or at least plateau, and it doesn't appear that that is going to be the case. They're going to raise it at least one more time. And until we get lower interest rates, that U.S. dollar is going to remain strong. And so look at what the dollar has done prior to the report till now. We were steady to slightly lower when I started work this morning. We're 55, almost 60 points higher at this time off of this news. And so, of course, when we talk about a stronger U.S. dollar, it means some weakness in our other grains, and especially when we talk about exports. And so, unfortunately, a soaring dollar in here is probably going to keep a lot of exporters away from our grain markets, our livestock markets, and put some pressure against the futures markets. So we haven't really seen it spill into gold and silver yet this morning. I imagine that's coming. The stock market is down sharply off of this news. It doesn't like this this report, this news, and we already have a lot of weakness in a lot of our stock markets, crude oil markets, because of concerns about the overall economy, and raising interest rates again is not going to quell those concerns.
And looking at the crude oil, it's slightly higher. The gold market is just a little bit higher right now. It's up like $1.40. Let's go through the overnight trade here on the grains. We'll take a look at our quotes here provided by Bar Chart. And the market actually would have traded a few minutes after the jobs data had come out this morning. Just wanted to point that out. Now, corn did weaken up. We're down 2 at 495.5 here this morning. Brian, I did not see any overnight export sales numbers this morning. Did you?
No, there wasn't any this morning. It's been a fairly steady week of export business, but we didn't see any yesterday or this morning. Exports next week, our export forecast on Thursday will be overshadowed by the supply and demand numbers, but they're generally going to be a little bit weaker than what we saw this week. We'll probably see a rebound in wheat, but corn and soybean numbers are going to be down from this last week. No exports this morning. Not a lot of news really for these markets to trade off of. We had some concerns in the wheat market amount yesterday, a lot of short covering that pulled corn and soybeans higher. Now wheat is kind of leading things on the overnight markets anyway to the downside. 3-4 cent losses by the time we close, pulled corn off of its highs. The question will be will there be fund short covering come into the markets after the opening? Will the funds step in, start buying some wheat, buying some more corn, and give us more short covering?
Yeah, you're right about the wheat. In December Chicago wheat, we are 4 lower this morning at 574.25. That would be about penny and a half from our low of the overnight trade, about 6 cents off of its high. By the way, in that corn market here, we did have the corn on the nearby December contract. The entire range from the top to the bottom overnight was only 4 cents. And we wrapped things up just 2 ticks from the bottom of that range, but basically it was kind of comatose overnight. Now, in our soybeans, here we had the soybeans just a penny and a half higher. November was at 12.8225. Brian, you mentioned the WASDE report next week. I guess from hearing the anecdotal stories coming out from around the country as harvest continues, I have a hard time believing that the yield numbers are going to go down,
You're exactly right, Marlon. So ahead of that report, we saw FC Stone and Informa out this week. Both of those firms had an increase in corn yields and a very small increase in soybean yields. The news wires are gathering the private analyst numbers. We submitted ours last night, and we're looking for about a bushel and a half increase in corn yields from last month, around 175.3, and then a small 6 to 7 tenths of a bushel increase in soybean yields. But it's the corn that really cannot absorb an increase in yields at this time. You know, you're pushing ending stocks back near 2.3 billion bushels, if that is correct. And so it may be kind of a case where we get a little bit of a short covering bounce ahead of the report and then weakness following that report into the end of the month.
Well, we talked about the Chicago wheat being down a little bit. Let's look at Kansas City and see how it fared overnight. About the same. December was down 4 cents at 686.5. In the spring wheat market in Minneapolis, you had December down 2 3/4 at 728 3/4. So pretty general weakness across most of the grains. We had December cotton actually 22 points higher this morning at 86.76. Now we'll come back in a moment and we'll talk more with Brian Hoops. A lot of times this economic news can have a big impact on livestock. Will it today? We'll talk about that next. All right, we are talking with the one and only Brian Hoops. He is the president of Midwest Market Solutions. They have locations all over the western part of the Corn Belt. Brian, talk to me about that jobs data as it relates to our livestock trade. I mean, the cattle market has fallen on hard times lately the way it is. I don't know if this is really going to help their cause. What do you think about that?
Yeah, I don't see it really helping the cattle market out. You know, cattle like to trade from a fundamental standpoint. With the drop in the stock market yesterday, down again this morning, ideas that the U.S. dollar is going to remain strong, I think is going to put into the traders' minds that what's going to happen with the consumer. Do they have funds to continue to pay these high prices of beef? Well, we saw a slowdown in exports. We've seen slowdowns really for the last month or so in our beef exports. Consumer spending is probably going to slow down. That means we're not going to be able to maintain these higher price levels, and it means cattle futures, I think, going to search for that price level that the consumer can support, and that's probably at lower money. Cash trade coming in lower this week. Packer margins really have not improved this week, and so I would suspect today's kill and Saturday's kill to be sharply lower in an effort to prop up those box beef values, which really just don't seem to find a lot of footing at this point in time. Now, the hog market had a big rally yesterday. A lot of it was because of that strong export number Thursday morning that we talked about. A lot of technical buying came into the market. They should see some follow through, and of course, the hog futures are a much different price level than what the beef are. You know, we were at contract lows or close to it in pork yesterday morning and rallied off of those lows. We may see a continuation of that and also some selling in the cattle market.
Well, that is one spiky looking chart on the lean hog, isn't it? I mean, it doesn't move in small increments at all. That is a crazy looking 3-month chart that we have on the screen. Okay, let's review where we finished yesterday on livestock. And as I mentioned, it's been a rough week in the cattle complex here. December live cattle futures were down 65 at 185.37. We'll see how they react to this jobs data this morning and the prospect of higher interest rates coming. November feeders were down 12 yesterday at 250.30, but the January was down $1. That had the biggest move. And lean hogs yesterday, as Brian pointed out, what a colossal move to the upside. December up $3.10 at 72.27. That'll be a hard act to follow. We'll see if they can do that or not when we open up today's trade in about 7 minutes from right now. Brian, great to visit with you again. Thank you so much. And
have a good weekend, Marlon.
You have a good weekend, too. You beat me to
Thank
it.
you.
All right. We'll talk to you later. Brian Hoops, Midwest Market Solutions. So.